Good evening, ladies and gentlemen. This is CURRENCIES Trading Frank. It's approximately 9:07 p.m. on absolutely beautiful summer, late summer, early fall evening. Well, it should be technically fall evening here on the East Coast, on the New Jersey, New York waterfront. It is September 30th, 2018, the last day of the calendar day of September. Full disclosure, this presentation, this webinar is purely for financial education, not for any solicitation or advice. Session will be recorded, uploaded to the CURRENCIES Trading YouTube channel. That is accessible to anyone with internet access, and please pass the word around for anyone who wants to get a feel of these very strategic, I call it precision videocast. Instead of writing long blogs, I like to present in visual terms, and those are known as video logs or videocasts, and these are all available. The free ones are available or on the CURRENCIES Trading YouTube channel. Keep in mind, I know some of you follow the CURRENCIES Instagram channel diligently, and that's fantastic. We're starting to grow. We're crossing over 300 so far, which is a small number in the world of Instagram, but the Facebook algorithm should pick us up very quickly, over a number of 500, I believe, for newer Instagram accounts. So please do spread the word, follow yourself. I put in some, highlights of what we do. Obviously, it's for promotional purposes, not for real-time content. And it's fun. It's good. You get a peek into what we do here. The highlights are some of our more powerful trades, things that we do. And it is, like I said, let's get the word out there for CURRENCIES Trading. And tell your friends, colleagues, anyone who wants to take a peek into what we do, to check us out on Instagram, CURRENCIES Trading. All you have to do is, if you don't have an Instagram account, just create one, just follow, and that's it. Nothing big. Doesn't cost a penny. So that's it. On that note, we have Mary, MB, walking in. Fantastic crowd. Thank you for all joining. And we shall begin. So I'm going to leave this open in the back. I don't have the writing board connected here, so I'm going to try to keep this. I'm just going to say, I'm just going to speak instead of writing on the little doodle pad. So what you, as I speak, what you see in the background is the face of structured volatility. As you all know what structured volatility is by now. Structured volatility simply is what I say it is, which is structured. It is extremely difficult sometimes during the daytime when you're in a position to see it go nicely up, fall back, do all kinds of stuff. But there's a structure to it, and that's what you're looking at. That's what I do with my CURRENCIES Trading tactical charts. When I say these are precision tactical charts, I mean it. Look at it in front of you. They might seem random. They do seem random to everyone out there. You listen to the media, you listen to your other services that you guys follow, or listen to some of the write-ups from the gurus as to what's happening in the market. They're always telling you that most of them are telling you the market is in massive danger. We're going to fall apart. All kinds of stuff. Terrible things are going to happen. We're going to fall into a recession tomorrow. You hear that all the time. That's the nature of news. That's the nature of a fearful mind. And there's nothing wrong with it. It's a free country. You can say what you want. But in reality, this is the world that we live in. So as tactical traders, we have to obey these charts, literally. And I don't mean it in a facetious way or a disrespectful way, but you do have to obey these tactical charts. And if you do obey them, it doesn't mean you're going to have a fantastic green day every day, but net, you're going to win. Net, you're going to wake up. If futures open up the way it is, up 11 points, everything is going to gap up. You're going to take some profits. You're going to re-enter, and you're going to follow the charts. That's really as simple as it is. Is it hard? Absolutely. Do I know it? Sure, I know it. But if you don't set up prior to these powerful gap up opens, you'll never enjoy the joy of selling in the first 15 minutes and literally saying, okay, I'm done for the day, and walk away. So that, the only way that a trader can do that is if they're set up prior to the gap ups, prior to the big moves that occur in the market. And you see that happen, this is the last massive move that happened in the market was right at the open on the 20th of October. I mean 20th of September, which was last week, not last week, but the week prior. So bottom line is the risks we already know. So let me just go over a couple of quick things as I'm flicking through the charts. Number one, we have, again, every week is a very critical week, right? Some weeks are more critical than others. It's like what, George Orwell once said, all pigs are created equal. Some are created, some are created more equal than others. I know it's a very sort of Machiavellian statement, but that's what life is, right? All of us are created equal, but some of us are smarter than others. I'm certainly way down on the smarter level, I'll tell you that. That's why I work so hard to make myself a little bit more smarter every single day. And thanks to God, maybe it's working. Okay? But in reality is that it's the same thing with markets. Some weeks are very critical, and some weeks are, are 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 critical and important. And every week is important, and every week is critical, and especially when it comes to your own P&L. And I think all of us can agree with that, because there can be very dull weeks where things are moving sideways. It's very frustrating. Yet you could have one of your best weeks. You know what I'm talking about, because you sat in one of the positions which you were sitting on patiently, and boom, that just goes nuts. So so when it comes to the week ahead, let me start off with the positive catalyst. Always good to do that. And the positive catalysts are, we have a Canada deal which might be completed by tonight. The Canadian Premier, Justin Trudeau, has called an emergency meeting at 10 p.m. Eastern Time today. That's the same time zone as us. And I'm sure he's going to try to get this NAFTA deal finally wrapped up. And there's no finality in things, right? There's going to be a lot of loose ends. There's a lot of dynamics going on in Canada, just the way a lot of dynamics that happen in our politics. He would love to have a great business relationship with the United States. Why not? We would love to have a great business relationship with Canada. Why not? They are one of our biggest export partners. So the key is that he's got a lot of lobbies he has to keep happy, and one of the most powerful lobbies in Canada is, somebody guess, what is it? Take a guess. Walter probably know. What is one of the most powerful political lobbies that literally, tell the government what to do back and forth? What sector of the economy would that be?
Labor.
Labor is labor, not labor. Labor.
Dairy industry.
Thank you very much. Farmers. Dairy industry. Exactly. Huge money. My brother-in-law is Canadian. He is a very smart guy, a lot smarter than me, a lot richer than me, and he had a client. He's a financial guy, and he had about, I don't know, I'm going to make this number up, but somewhere in the region of maybe $10 or $20 million with him. I said, Jesus, and he lived in a big farm, not too far away from Toronto. Maybe 100 miles or less. And if you've been to Canada, you go 20 miles outside Toronto or the burbs, you're like out in the boonies. And he said, yeah, he's a farmer. I said, holy cow, because you don't even know how powerful these guys are. So that's what it is, So the farming and the dairy industry specifically, somebody correctly pointed out, is controlling. Trudeau will lose elections if he just goes out and acquiesces and agrees to all the demands that we are demanding, which is a fairer, which I agree with, a fairer structure on Canadian dairy imports into the U.S. Canadian lumber is very powerful too. So, why not? They have had the golden goose for years and years, so why should they just give it away? Do you give away things that, and somebody comes in and says, that's it, you got to change? No, forget it. You're going to fight it tooth and nail. So they're doing it. So that's one of the impediments of what's going on with the Canadian deal. And hopefully we get some sort of deal kind of worked out, and then they move on from doing it. So that's one positive. The Mexican deal is put in place, so we're good to go. We're working through with Europe. We cut a nice bilateral deal with South Korea, major business partner of ours. China will take time, but a lot of stuff is happening underneath. As you know, as some of you know, some of you are following my posts and stuff. China has basically started to lower import duties on multiple products, heavy-duty machinery, cars, and stuff like that over the past couple of weeks. And the powerful under-the-table discussions are very much in progress. The jingoistic over-the-counter type of big speeches from the Chinese premier for his political base, except China's not a democratic country. It's basically a capitalist it's a capitalist dictatorship controlled by the main Chinese leadership on the top. And then good old Donald Trump here screaming and shouting against China. Those are primarily for political edification, right? Those are to keep the masses happy, keep the votes going, and stuff like that. But there's a lot of really powerful critical stuff going on underneath the surface, and I believe that they're making progress. China realizes that they need us badly. We realize that if we completely kick out China out of the system, there's going to be a huge disruption on the supply chain management, i.e. manufacturing processes, which don't change right away. Some of you might know who follow that a lot of companies from China are now basically, have been before, and now more so, are outsourcing their production facilities and factories to other countries, which have been U.S. business partners, and we have no tariffs against them. Countries like Bangladesh, countries like Vietnam, labor-intensive countries like Cambodia, Laos. Flip over next time you're at the store and you'll see made in Vietnam, made in Bangladesh, which is the second biggest, largest textile producing country in the world. Powerful. Those guys are minting billionaires probably every month. But they're doing it, they're not flooding our economy, our thing with, cheaper and cheaper products. They're just manufacturing it at a better cost. That's all. So bottom line is China's already doing that. So there are stuff happening on that side, and I remain optimistic, just like Peter Navarro has said, Larry Kudlow has said. Mnuchin has been very quiet. I haven't seen my buddy Mnuchin in a while now, but he's probably doing some good stuff. And I'm sure they're negotiating pretty hard. And there will be these powerful, these midnight and early morning tweets coming out that China is like, this and that. But hopefully they're going to be tempered, and hopefully they're not going to disrupt anything too bad. But I'm sure that it will happen. It has to happen. It has to happen. So, what are the other positives? A big positive that occurred over the past week or so was what? Stabilization in, somebody fill in the blanks. A big stabilization in what? Take a guess. A very critical component which was rocking I'll already give a clue, the global financial markets for weeks and weeks. And that has stabilized in a major way. Take a guess, guys. No one? I'm sorry? Emerging markets. Thank you. Is that Milan?
That's correct.
Yes. Emerging markets, EM. So these things are really important to know, because when you know these things, you are not as scared and doing stupid things, and you stick with the game plan. That's the reason why my service is a very all-rounded service. I'd like to educate my members, because what was it, Gentleman's Warehouse said? Who was the word? It was Sims back in the 90s used to say an educated customer is the best customer. Well, that's the same way. An educated member at Clueless A Trading is the best member, who's not going to flip out and cancel his membership every 2 weeks and then come back in a couple of months saying, man, I should never have left. Because that's really what retail traders do. They quit. There's no point in quitting. Some days, if you decide to take a break from trading, take a break from trading. There's no point in leaving the service, because the service is offering you, Clueless A Trading is offering you a very comprehensive understanding of the market. So if you get completely cut out and you completely are removed, what do you think? You're just going to walk in 3 months later and say, oh, I'm going to do great. No, you're going to lose money in the first 3 minutes because you have no idea what the heck's going on. So it always is great to be connected. And for the few dollars that is part of the subscription fee, I think it's worth it. So it's just the way it is. So yes, emerging markets. The emerging markets have stabilized in a massive way. And just to show you the proxy for the emerging markets on this side, which is the EEM, Emerging Market ETF, take a look at it. This stabilization This is what emerging markets did since the beginning of the year. They had big rallies for a couple of weeks, but they overall slid down. So now they're at a critical point here, and we're going to look at this because this is going to affect the U.S. markets in a big way. So that's a positive that they have started to, and this was the bottom of 9/11. 9/11. Wow. And does anyone remember when emerging markets hit its lowest point? What caused it to hit its lowest point? What country?
Italy?
No, completely incorrect. Turkey. You guys forgot Turkey. When they took the pastor and when President Trump went ballistic on Turkey and put sanctions against them, Turkey's a major economic power, emerging market. Turkey basically collapsed. You know that. You guys know that. Italy is a minor factor. Look, I have great Italian friends from Italy, not the New York Italians. They're great people. They're a great culture. They're a bunch of absolute mess. Okay? Whether it's the Five Party, whether it's the Nationalistic Party, whether it's the Communist, the Leftist, whether, don't forget, Italy had the biggest terrorist group back in the 70s. Does anyone remember? Anyone know that? Anyone who knows world history? It was called the Red Brigade. They were like the ISIS. They were a bunch of intellectuals who attacked the government. They were all doctors, engineers, and stuff. They were anarchists. So Italy is a complete, it's a beautiful country, beautiful thing. They don't know how to run their own country. That's serious. Okay, so Italy's mess will always be there. Right now, we're going through a minor Italian crisis. That's the reason Friday the markets went down. So I just yawned. I said, okay, give us another opportunity to buy, like I said. And look at futures now up 10. So no, Turkey. So Turkey has a dictator who is very business friendly. There are more Trump hotels in Turkey than any emerging market country. So some of you don't know. And basically they need to release the pastor. And in one of my videos, I explained very clearly as to what this political confrontation is, as to why this is happening. Because there is a nemesis of the dictator, Erdogan, who lives about 80 miles from here up in the Poconos in a massive sprawling estate. His name is Gulen. And he wants, Erdogan wants him back. And we were actually going to send him back till General Flynn got into trouble with the government, right? Because General Flynn was representing Turkey. And this guy, Gulen, should be sent back, in my opinion. Why not? Anyway, to make a long story short, Turkey caused the bottom. And this is where we are since September 11. And over the recent weeks, the IMF has worked out with Turkey. Turkey's central bank has taken control of their mess, and Turkey's central bankers are very smart. Very smart. And we have NATO bases in the north. Turkey, net business-wise, a very modern country. So when Turkey stabilized, the rest of the world stabilized. And after Turkey, what was another major emerging market country where currencies were going nuts? There were two. Name me someone. One which is not, it's in the Western Hemisphere, which caused also turbulence in the market when markets opened up, boom. And then within like the 3 hours, boom, everything just slits down. We take profits, boom. We buy a little bit, those are down for the day. A lot of these are waves.
Venezuela.
More than Venezuela. Argentina. There you go. Now we're getting some responses. There you go. Argentina. And the other country, which is a little far away, another beautiful part of the world, which is a powerful country, minerals and natural resources, gold, diamonds. What country is that? Which is an emerging market country, which went through major turbulence and still is in turbulence, and also affected global markets. And we were, which all washes ashore to the U.S. markets, too. But that has not stabilized, but is not going down anymore, currency-wise. Take a guess.
South Africa.
Thank you very much. Must be Milan. Yes, South Africa. The rand. The rand is a very powerful currency, and the rand was collapsing because anytime emerging markets have massive disruptions, and this was all a ripple effect out of Turkey, believe it or not. Now, one last thing, without making you guys all specialists in emerging markets dynamics, is why do emerging markets get destabilized aside from their own disruptions? What is one major factor that destabilizes them, which has also been somewhat relieved. The emerging markets have been very relieved over the past week because of the Federal Reserve. Because the Federal Reserve doesn't just look over the U.S., they basically, believe it or not, have major effects around the world in global markets. So what is the one determining factor that causes emerging market currencies to appreciate or depreciate or fall out of bed, which causes major disruption? Go ahead, guys. Somebody take a guess. This is not hard stuff, but this stuff you should know, so you don't freak out every single time the markets are going through this structured volatility. And it's clear, and of course we're going to go into the technical, which is probably one of the most beautiful charts right there you're looking at, telling you that we are going to go up to new highs. Go ahead. What is that?
Value of dollar.
The U.S. dollar. Thank you. Milan again. All right. So yes, the U.S. dollar. And why is the U.S. dollar so important to emerging markets? I've mentioned these many times in my videos. So some of you, if you have listened to me, you know the answer. Some of you just yawn and, I'm just here just to, obviously are not listening, but that's not your fault. Some people are keen learners. Some people are not. It's not anyone's fault. Why is the US dollar so important to emerging markets? And emerging markets, by the way, are the fastest growing markets in the world because that's where you're seeing the highest level of consumption. They are the ones buying our goods in a big way. And everyone wants to buy an iPhone. Everyone wants to own a US-made product. Everyone wants to basically, the governments want to own Boeings and F-16 fighters and buy our stuff. That's why they're so important. So what is about the US dollar that is so critical to emerging markets? Why?
Trade competitiveness.
That's a bigger word, but why? But trade competitiveness meaning, yeah. So that's one. What is the other factor about the emerging markets? Anyway, I'm not going to waste time questioning because obviously many of you have really focused it all in what I've explained. Because emerging markets carry a lot of debt. And that debt is denominated in US dollars because the dollar is king. A lot of times you heard about that the Russian government is not going to trade in dollars anymore, and the Iranians are going to sell oil in yuan, in the Chinese currency, and they're going to trade oil in the ruble, the Russian ruble, which is just complete crap, by the way. That's why it's a great time to go to Russia. Oh, that's another major emerging market. Even though it's a developed country, the market is falling apart because of all this stuff, and that has started to stabilize. The Russian economy is very weak. So, yes, because all emerging market debt is marked in US dollars. So if their currencies fall, the US dollar ratchets on a certain day. All you have to do is watch the dollar in the morning. If the US dollar is ramping up, you're going to have a down day overall. Because the US dollar getting stronger means they have to pay a lot more to service their debt. Got it? So that's why it's so important, so critical. So the US dollar has started to stabilize, not skyrocket nuts. Emerging markets currencies have started to move higher because they have started to move in the right direction, stabilization. And what else is going to happen within the next week to 2 weeks, which I mentioned, that is going to have a major impact on emerging markets? And I mentioned that a few times. If somebody can tell me this, and Milan, please, you don't know the answer, don't say it. I want somebody else to try and use their brains a little bit, okay? What is going to happen that's going to make our markets poop, which are going higher anyway, but is going to have one of those 200-300 point days, just on one headline. And I mentioned that last week. Let's see if anybody's really a thinking trader. Please, we don't have all night. So does anyone know the answer? Something's going to happen, which has to do, I'm already giving the clue, which has to do with a country where our President Trump has said has to happen. And I agree with 120%, which was the cause of the fallout in Turkey. I've already given the answer. What is it? Even after this, if somebody doesn't volunteer an answer, oh, that is sad. Okay? All right, Milan, throw it out, man. Come on.
Yeah, trade in terrorists.
What? You guys must be living in La La Land. The pastor, the pastor, the pastor. The great pastor which caused the start of the Turkish sanctions and Turkish economy collapse. The pastor has been blamed for spying for this Gulen guy sitting here in the Poconos, who is the arch nemesis of Erdogan. Guys, please welcome to the real world. Okay? The pastor is going to get released. And if the pastor gets released, Donald is going to say some kind words about Turkey and remove some of the sanctions or all of the sanctions. That means emerging markets will have a mofo rally that's going to make your portfolios, if you're set up the right way, fat. The pastor. Pray for the pastor. He's a good man and he needs to be released. He's not a spy. But like these countries, a lot of countries do, outside there, friends and foes, they arrest somebody and then they say, oh, our judicial system is going to basically work that through. And then they basically slam them in jail for a couple of months and then finally release them. It happened with North Korea all the time, right? The pastor. So watch out for that headline coming out. I put an important thing because I saw it on Bloomberg that the talks are closed. And the markets actually rallied on that news. Some of you remember. The pastor, guys. The pastor will affect your P&L. Will affect your despair and your happiness on a certain week on stocks and options. The pastor, my friends, shall be released. Amen. All right, serious. They're already close to it. And we will remove some of the sanctions, the very harsh sanctions that we put out on Turkey to punish them. And boy, did they get punished. Not fun for the Turkish people, I'll tell you that. Thanks to their stubborn dictator, Erdogan. So there you go. So that's not the positive that's going to come. Now the negatives, we already know the negatives. Escalation of the trade war with China. We don't, tit for tat, hardcore, so we don't want that. Oh, the other thing that happened last week, very, very important for all of you to realize, was the Federal Reserve. The Federal Reserve, basically, Jerome Powell is a phenomenal man. Janet Yellen, almost forgot her name for a minute, was a great lady. I called her Ma Baker, the Brooklyn, grandma you don't want to mess around with. We have great Federal Reserve people. So Jerome Powell did, the U.S. economy is strong. He'll raise rates along the way, but he also acknowledged some of the risks that's along the way and did the perfect thing. What did the markets do? Shut up, came down, threw out all the idiots who basically did not follow the tactical charts. So if some of you got punished, I'm sorry to say you deserved it. Because I said it was going to move heavy. It moved heavy on the day of the Fed, so you needed to take down profits. And then the few things that we bought, we were supposed to bounce at the end of the day, that fell. So you could have bought things really cheap. And guess what happened the following day? The markets went berserk, higher. That's just the nature of the market. So you can, not some of you, but some members, few members, this national standard procedure, they're like, cancel the subscription. And standard stuff happens everywhere. So what was, these people, they're constantly looking for perfection. It's not perfection. The only perfection that you see are in these tactical charts that are in front of you. This is a naked chart, as I like to call it. A chart without clothes on. Even in here, you see massive volatility within a structure. And this is that same chart dressed in beautiful designer clothes. So you know what's going on. So so basically, the markets are so risk wise, the Federal Reserve calmed the U.S. markets, calmed the emerging markets, that they're not going to go hog wild and raising rates. And for reasons as I explained in the past couple of minutes, if the dollar keeps on getting stronger and stronger, because we're going to go raising rates, obviously, if you raise rates, global money likes to come into the U.S. and put money in U.S. dollars so that they get a higher rate of interest. But that's not great for anybody. It's not good for emerging markets. Not great for our multinational companies, which basically bring in the biggest bacon and money for the U.S. Right? The Boeings in the world, all their items are going to be priced a lot higher, and you don't want our customers around the world to not afford to buy U.S. products. What makes America great? What makes America great is companies that we are the world's, and that's what the basis for Trump's trade war, tariffs and everything are, that we need to basically make our products competitive so the rest of the world can buy a lot of our products. That's what we want. Our cars, our planes, our technology, and all that stuff. So overall, we want them to be able to afford our products. If they can't afford our products, they can't be buying it. And then that's going to hit us hard. So no fiery speeches or anything can help it when people are losing jobs. Companies hire people because there is demand out there. The demand is not coming, the big demand is not coming just from us. How much can we buy? We already buy like nuts. I don't, but the average American is a shopaholic. So, but it's the world. We want to sell to the world. That's where the growth is. So anyway, so those are the things. So that's the bigger picture in a very simple nutshell. I hope everyone understood that. So the major risks are the escalation in trade wars. The major risk is companies, and this is very important, guys. This is going to be coming out over the next week or two. Hopefully we don't hear too many of them. Companies issuing earnings warnings, saying that their earnings might be a little bit lower because of this trade friction, global trade friction. We have to watch out for that. If any one of the bigger companies, guys, and listen carefully, I don't care what you own and how, which gurus you follow, aside from Clueless Day Trading, who are telling you anything. All right? If a large company, let's say an Intel, I'm picking up example, says that their foreign business, or Boeing, is even slightly impacted by these trade wars and stuff, they've already kind of warned a little bit, but not for earnings, then we are going to have a big fallout intraday or intra-week. All right? So just keep that in mind. Any earnings warnings coming out because of this ongoing trade friction, trade skirmish, trade war, whatever you call it, is not going to be good or conducive or positive for our markets and for trading. It's not going to be the end of the world. It's not going to be necessarily good. So that's another risk that we have to deal with going forward. There might be other risks and stuff that's not coming to my mind. When it comes in, I will explain. So far, we're good with the broader picture? Yes?
Yes.
Okay, very good. Now, saying all that, what we have in front of us is the volatility part. I'm not going to keep on harping on and on, but you guys have to learn how to deal with volatility. I try to learn how to deal with volatility every single day. My charts have been a salvation. Is my P&L green every day? Absolutely not. Overall net, is it green? Absolutely yes. Okay, that's great. Somebody's choking on it. All right. Bottom line is that, hey, I hope someone's okay, because you just did a massive hiccup. So bottom line is that you guys have to force yourself, whether you like it or not, to understand these charts. Don't have to trade intraday that much. Don't have to go hog wild and try to make a move on every single SPY or SPX call or put. Don't have to do that, but you have to know the broader picture, and you have to know how to manage your trades. Will some stocks sometimes disappoint us? Absolutely. Will some stocks disappoint us and then turn around and go up like a nut? Absolutely. Do you have to understand the dynamics of different types of stocks and the types of options that they trade, and the delta and the gamma and the theta and the elasticity of the option versus the price of the stock, well, that's where real trading comes in. So for those, you got to sign up for the ACS sessions, and I'll teach you guys as much as I know, and it's certainly going to help you guys. So moving on, here's your naked chart. This was the big flash crash back on the 26th of September, and this is what we did. This is a overall looking like I said, even the naked version of this is looking like a W pattern with a neckline at the highs of 29.36, where I said 29.36 on the E-minis, which is roughly around 29.40 or so on the S&P 500. It went there. Once it went there, this is what it did. These moves, this is one W, if you can see that. This is an inverted head and shoulder, almost a perfect one. I want people to, understand this. This is almost a perfect inverted head and shoulder. Each of these candles back and forth drive traders nuts, sometimes drives me nuts, but even during nutty times, even during the most difficult times in our lives, and I've probably gone through a lot of them, I try to stay calm. And that is a major ingredient of being a successful trader. All right. So saying on that and is this. So this is absolutely a beautiful chart. Here's your head. Here's your left shoulder, right shoulder. We have seen these repeats of this all the time in individual stocks too, as you guys know. Left shoulder. And look what markets do. It created this big pop down at 12:45 in the afternoon. This was on the 28th. And it reverses. Look at that. And it reverses off what? It reverses off the right shoulder. Isn't that amazing? So if anyone says markets are completely random, which the media keeps on saying all the time, a lot of hotshot analysts keep on saying all the time, hey, the markets are really wacky. Well, markets are not wacky. There is order in chaos. And that's what we try to specialize in at Clueless Aid Trading. We try to find that order within that chaos through these structural charts, which we're going to go into. We're showing you a naked chart here. And through that order, we want to make money. That's the difference between a tactical trader and an emotional trader who always looks for perfection. And even when perfect moments come, such as these type of big hammer reversal trades, those so-called emotional traders who look for perfection are not there. Very oxymoronish, right? If you think about it. So here's your neckline. We broke out of the neckline on the 30th. We broke out the neckline as we speak. As we speak. Today's the 30th, right now. So these patterns keep on repeating themselves. So you have to know it. And the overall pattern looks like a big, and I've shown this repeatedly, a quadruple bottom. 1, 2, 3, 4, or more like a triple bottom W pattern, which is going to resolve itself at the highs, possibly pull back a little bit, and then make a new high. A new high in the market. And I always go on the line with my forecast, obviously. That's my job, right? I believe a new high in the markets are coming. I've said that months ago. I'm saying it again. But it's only going to come through structured volatility. So one way to do it is to buy a call going into by mid-October. We should have a corrective pullback, nice one. So and then the other big risk to the market is, which I forgot to mention, are the November midterm elections. If the Democrats, and this is not a political statement, just saying it, the Democrats take both the House and the Senate, the markets initially will fall anywhere from 500 possibly to 1,000 points. And then they will rise. You know why they'll rise? Because they won't be able to change anything. The business policies are set. What are they going to just completely rewind these great business changes and programs that have been put in place, whether it be the tax cut, business tax cuts and stuff? I'm very much for the business tax cut. Personal tax cuts, I don't know. Why should billionaires, trillionaires get a tax cut? I just don't quite understand it. Okay, and I'm a true capitalist. But for the average American, absolutely. So, great incentives for U.S. corporations, tax cuts, I'm all for it. Repatriation tax cuts so they can bring the trillions back from overseas? Absolutely, I'm all for it. So business incentive to grow America? Absolutely, I'm all for it. So will they be able to overturn all that, the Democrats, if they win both houses, Senate and Congress? Nope. But initially it'll be like, oh my God. Because don't forget, whether one likes it or not, under Democratic administrations, the markets have risen hundreds of points, hundreds of percentages, right? 2008, who was there? The Dems. They control the White House and the thing. Where did the
Yeah,
market
Frank.
go from 2000? 1 second. Yes, go ahead.
Yeah, just a quick note. For the past 75 years after midterms.
I'm sorry, what?
For the past 75 years after midterms, markets up 15%.
Oh, that's a statistic. Okay, thank you. So in the past, so Milan just mentioned, and I hope you guys know Sarm. He's a great new member. Really appreciate his involvement with us. Very educational. Is that he mentioned that in the past 75 years after the midterm elections, the markets have been up an average of 15%.
That's correct, 100% of the time, regardless of who the
Holy shit!
administration is.
Oops, sorry. The markets are up 15% after the initial shock, which is inevitable. If it is a 1,000-point shock, I doubt it. I don't know. Okay, people tend to forget that this tariff thing that we all blame, and sometimes I scream at it. We all scream at it, right? When Trump tweets, sometimes goes ballistic. Is actually more supported by the Democrats, who have been more protectionist than the Republicans, who have always believed in free trade and supply side economics. So, but this is a great statistic. 75 in the past 75 years, after the midterm elections, the markets have been up an average of 15%, 100% of the time. Wow, that's big news. Okay, I'll take it. So, let's move on to charts. So there's your NECA chart. This is what's going on. Let's take a look at the 15-minute chart here. The face of structured volatility, the face that drives you guys and me sometimes nuts. We're sitting on a Google, we're sitting on an Apple, we're looking great. Markets open up within 15 minutes. If we're not quick enough to sell, boom. And end of the day, you have a red P&L. So what is the difference between a retail emotional trader and a tactical trader? A tactical trader feels like crap, sets up, buys a little bit more, knows that he's looking at these, very powerful resets, and buys. A retail emotional trader just makes their face, swears, and doesn't do anything. And the next morning, markets ramp like a nobody's business. The same position that he or she had goes into the green, but barely goes into the green because they never dollar cost average down, even if they could. That's the difference between a tactical trader and a retail emotional trader who's always looking for the markets to do his or her own beckoning. In other words, they always want it to do the way we want it to do. Markets don't give a flying F about us, guys. The more you accept that, the more you embrace structured volatility and these charts, the better off you will be as a trader, as a human being. Markets don't give a hoot about us. Markets know exactly when a human trader is going to not just go for the diapers, but sleep with the diapers. They know exactly when the chat room, they're yelling at the end of the day. When chat room goes, there goes my stuff. And that, there goes my stuff, it's all over, is the time to tactically add some positions, whether it be a 30-cent call or whether it be a $3 call. I mean, $3 call. And that's why sometimes I'm very direct in the chat room, and it offends some people, and I really don't give a, you know what? Because my job is to stay focused and disciplined. So somebody's crying in pain and stuff like that, and I cry in pain too, believe me. Except I try to take that pain and make it into a positive energy by tactically setting up my book so that I can make a lot of money the following day in the next 24 to 48 hours. Like I say, we're going to have a big, massive reflex bounce. So if you're going to cry in pain like a spoiled baby, okay, not like a tactical baby, just kidding, but I'm not going to encourage that. But I'm not your mommy, so, you know, that's the way it is. So that we are. One thing I'll tell you at Crude Trading, we're not going to have massive Dr. Phil and Oprah type massive crying sessions at Crude Trading, okay? We're not going to sit there and hug each other and say, oh my God, it's, this is so bad. We're never going to have that. We will tactically retreat. We will reshuffle our losses. We will set up and we will make back our losses 3 to 5 times over, because that is exactly what real traders do. We are the Marines of clueless trading, of the trading world. So I hope you guys listen to it really carefully, because we have had some real crybabies. And you want to cry on your own. There's nothing to cry about. We live in America, and we're lucky. And that's all you need to know, guys, all right? So wake up! So let's look at this chart here. This is fantastic. Does it feel better if futures are up 11? Absolutely. Would it feel like a little bit of a crap? This is where we closed that on Friday. What did we close on Friday? Let's see here. 415, right there. So I'm going to zoom out. So as you can see here, before I move on, before I zoom in, is the fact that this was the huge impulse move. We retreated back on that. We held that massive support. I put these beautiful green shaded areas with arrows, because that are your shoulders. And the trading range, which I repeatedly showed and wrote down in simple English what the trading range would be, which would be around 29.34, midway 29.18, low end 29.05. We break, 29.05, you can short very nicely all the way for another couple of 100 points. But this is our trading range right now. If we break out over this, which I'm not saying we will, then we are going to make a new high. We break below this, we are going to fall, and we are going to, we'll lose a couple 100 points fast. Do I think that we're going to break this? Yes, I do. Why? Because I'm a constant overall bullish? Not really, guys. All right? We're going to break this for a simple, natural, physical reason. Ever take a hammer and hit something really hard many, many times, like a nail? What does the nail do? Pop out every time you're hitting it? No. The nail goes into the wall or whatever you're trying to put the nail in. So it's the same thing. Every time a resistance gets hit, it gets weaker and weaker. And then it breaks out. And this is a short-term picture. This is from the 20th. So from on the lower end, every time it gets hit, if you hit it again, and it will probably get weaker. But every time it held the support. So that's a good thing. So on the upper end is the same story. The ceiling you're trying to break out of. It's like you're trapped in a cave. So here's the lower end of the cave. Here's the mid-range. Here's the upper end of the cave. And you're trying to get out of this cave or cavern. You're stuck. So you're trying to hammer away so you can create a hole so you can crawl out of it. Right? So that's the same thing. The range. The quad top resistance. This is the quad bottom support. This chart you guys should screenshot. Here's a quick helpful hint to all my traders and members. Forget about printing. Screenshot. There's enough free programs on the internet. Just download one. If you use Windows 10, you can screenshot it directly using Windows 10. Well, I use different programs. One is called Tiny Take. It's really excellent. Those are the ones I use to screenshot and put out my content on the real-time Twitter feed, so all of you guys can see it. It's very clear. It's very markable. You can mark things, but you don't need to mark things. Just screenshot my charts, put it away in a folder so that you can refer back to it when I'm updating it, and you'll say, okay, you can see what's going on. Because what happens is a lot of you, in fact, most of you, I think, I don't know, you guys are looking at my charts for a quick second, and if you're not looking at it, please don't even bother being here, and then you're forgetting what it looks like. So there's no sequence in your brain as to what's going on. So you screw up on your trades, whether it be a technical chart like the market or whether it be individual stock chart. So screenshot it, put it in a folder. So you can quickly click on it and look at it. You can do that on your iPhone, your tablet, your Samsung. You can put it on your whatever, any device. Do that, okay? Simple things, simple things. So this chart is absolutely brilliant. So I'm moving away here. So this happened. This was a huge monster rally, and then this is what's going on. So somebody please mute their mic. It's a very sensitive mic, so a lot of feedback's coming in. So that there is where we are. We're in this trading range. This trading range for active traders. Please, somebody please mute their mic. There's a lot of feedback coming in. Please. I muted. It was Mike. So, Mike, as long as you can hear us, I just mute your mic, okay? So that's all, because there's a lot of noise coming in. Remember, I only have 3 brain cells left, so 2 of them are very operational right now as I'm going through this webinar, and one of them is kind of like half sleeping and it doesn't want to wake up. All right, so that noise was waking it up. All right, that's kind of sad. Stupid humor of the day. So, all right, so here's your trading range. And this is the volatility trading range. You can see the patterns. I can see the patterns, the Texas Bullhorn pattern, all that good stuff. And you can trade these ranges. But more important than trading the ranges, let's say we're not trading the ranges. More importantly, the setups. The setups. Like I said, the pastor needs to be released. The setups. If you don't set up trades, you will never make money. Chasing trades in the middle of the day does make us money. But it is it's like jumping on a fast-moving train. It's tricky. And you can slip. Setting up something and then jumping out of that train as it starts to move really fast, like it's doing right now, is where it's a smarter way of making money. So if you're not set up, you're never going to catch this. Whether it be an Apple up 400% the following day after we buy it because of the tactical lows, or whether it be so many other things. Remember, earnings have no setups. Earnings are a 50-50 gamble. Some are going to work, some are not going to work. And net, they have overall produced a big positive return for us. But if you lump into just one earnings and it doesn't work, what can you do? It's not going to work. You take the loss. Or you can sit on it if it's reversing, and it might work. But that's a different story. I'm talking general overall trading. You got to have the setup. So the setups are always here. The setups are always at the structural levels. Left shoulders, right shoulders. The heads are the biggest setups. The double bottoms. These are the biggest setups. This is where you basically sell. Now you come in the next day and you buy when the market opens, and it's one of those like gap and go days. The gap's up and then starts running. This is 10 o'clock. This is 9:30. Sure, you can make money. But what if you came in at 1 second, I'll give you the reality of trading. What if you came in at 10:30? Everything is looking fantastic. That's 10:30 right there. Look at the bottom timing. And you bought by 10:45. Remember, these are 15-minute candles. They basically pull it down just a little bit. Nothing changed other than a quick reset. Remember, sleep with these resets. Bow to these resets. Because if you don't understand stochastic resets, then you don't know how to manage your trades. Resets will happen. Some faster, some slower. The longer term resets, like the 1 hour and the dailies, which we're going to move into now, are going to be slower than the 15-minute. That's why it's called the 15-minute. So 15-minute reset, boom. You're like, oh my God, here we go. I got in. Look at this. I put in $800 and now it's down to like 400. Or you put in $1,000 and it's now down to 600 because this quick reset happened. Profit takers came in. Nothing changed. It was a reset. If you panicked and sold, you didn't have the ability or you didn't get in mentally, boom, goes higher. Nothing changed. And by the time if somebody gets in here at the top of the range, that's stupid, because at these levels, that's when I issue those multiple alerts. Takedowns, sell, full, partial, large, or any tactical profits. What's that in simple English? Get the heck out of Dodge, because the sell program is going to come in right there. Is it that difficult to understand? Now, it could have overshot, but I'm going with the higher probability of what might happen based on the previous things, and I'm looking at many other stuff too. So then you guys don't do that. Some of you, and bang, it comes down. You're just like, this sucks. Trading sucks. Tactical chart sucks. Frank sucks. Great. I love it. Every time somebody gets mad at me, so every time somebody thinks like, I don't know what I'm doing, I feel great. That means I'm doing something real. Do I think I'm perfect? Absolutely not. Do I think my method of how I do things is absolutely far superior than anything out there? Absolutely, I believe that. American exceptionalism, man. Gotta use your brains. You gotta use your brains. Don't use your brains, you're delegated to the, heap of emotional misery as a trader. So that's it. So this is where we are. Now, we're back to that range again. That infamous range. Another couple of points, right? 2-3 points. Futures are up 11. I hope the bastard gets released tomorrow. But really, just for his sake. He's a good guy. Turkey will breathe a sigh of relief. Because that, stubbornness by world leaders, doesn't matter what country, race, creed, or color, when leaders of nations are stubborn and dogmatic, they make their people suffer. And that's what he did. It's high time. So, do I think that it's going to break out this time? Do I think we're in that seasonally first part of each month, right? 5 or 6 trading days, which are where the new pension fund money comes in. Big billions of dollars in select stocks, select sectors, buybacks initiated by American companies. Yes. So those normally last 5 to 7 days. The flow. Remember, what makes markets, what's the absolute bottom thing that makes markets go higher? What is that? What is the one asset that makes the markets go higher?
Capital inflow.
Milan, you got to speak.
More buyers than sellers.
Yeah, that's it. So what does more buyers mean? More money coming in. So inflows make things rise and outflows make things fall. That's it. That's it. Right? Buybacks make things rise. Just in general. When people buy more, it goes higher. When people sell, it goes lower. In between, it does a lot of funky stuff. So that's it. So that is your tactical trading chart. Screenshot these things, put them away. If anyone wants to know any free program, I'll look them up for them. I use a couple of them. I'll give it to them. Just download it. Screenshot these charts. Put them in a folder. And then you'll see the difference to your trading, because then you'll be, when you're looking at the newer one, you can just open the older one and say, okay, this is where it was. You'll really get to understand it. So let's move on, because we have a bunch of things to cover. So that's your 1 hour chart, which can, this is your 1 hour chart. This is beautiful. This gives you a much bigger picture. Is it a really positive chart? No. You know why? Somebody answer me why. From a technical standpoint, why is this not in that zone where, unless it breaks out, that will issue the signal that we are going to test the highs, possibly higher highs, overshoot. But as of now, why is this still from pure technical basis not a full-scale validation? Not that there is any full-scale validation of a confirmed breakout. Why?
Or overbought.
It's overbought is one. Yes, overbought is one. Overbought, remember, can move sideways and create this, right? Primarily because the way I look at it, we are range bound, like I explained, right? So range breakouts are very important. This is where the buyers and sellers fight each other like nobody's business, the bulls and the bears. The bears say, nah, we can't break out over 29.32, 29.34 on the E-minis, on the futures. And the bulls say, nah, we can break out. And overall, every time it's gotten to the top, the bears have won. Markets have pulled back. Now it's tough. It's no guarantee. So if somebody shorted really hard and it didn't, and it broke out like it did here, a false breakout, that's a false breakout, by the way. So that's one thing. The other thing is that if to me, it still looks like a head and shoulder. Head, the right shoulders, ascending triangle breakout. So we break out of the right shoulder. Does everyone see that? This is your critical neckline support, 2905. We fall out of this. Definitely screenshot this chart, guys. Very important. Then you know what the lower levels are. 2883 is a major. Mike, I'm going to mute you. There you go. Okay. So, Mike, what you need to do is you need to move your mic a little bit away from your, right? Because I can hear you, you breathing and stuff, and that's really disruptive. All right. I muted everyone. Can everyone hear me?
Yep.
Okay, good. So bottom line is that to me, at face value, this still looks like a head and shoulder. Even though the right shoulders have been broken here, as of yesterday, as of Friday, this is really important. As of Friday, we were still stuck on the right shoulder. So why? This is your right shoulder. Oh, get the pen. Here's your right shoulders. This was Friday. We were still within that right shoulder. We are just now breaking out over the right shoulders. Remember, this is what a head and shoulder looks like. It's like flipping the birdie, right? With a neckline. There's your neckline. They're very important. Very important. You don't understand this stuff, don't be a trader. You don't keep on losing money forever. So then it can transform itself. So many cases, the neckline support, as it's doing here, is going to be the biggest buying opportunities. So far it has been. You can buy here, you can do very well. This happens with stocks all the time. So why do I think it's going to break out is what we're going to find out on the next charts. And some of you already know that because I've shown the daily and the weekly charts repeatedly, which are showing you that we want to go higher. In the meantime, it could hit this, very well hit this, and we can start doing this again. All of this lasts anywhere from 1, maximum 2 days. All right? So every time that you're panicking, right at the bottom, critical neckline support, use that panic to set up long trades based on a very simple formula. Resets. Of course, I will put in my more advanced input, which you will incorporate your own gut feelings. But this is where normally the buyers come in. That's why it's called a range. Very simple from an understanding standpoint. So that's it. Inverse head and shoulder neckline. This is inverse head and shoulder, right? So that was the neckline. This is a very powerful breakout. I've said that anytime you have these type of extremely powerful breakouts, this ascending triangle breakout, Mary's favorite word, the point is that it will retest, and it did retest. See? There. Nothing really difficult to understand about this chart. Let's move on. Okay. Now, if it breaks out, we don't get super excited. Just like Google, just like Apple, they're all trading in a range, upside range, but they're trading in a range. So does the market. So you got 15 points from here. What's 15 times 7? About 105 Dow points or so before we hit big, big resistance, which is the previous highs. Not rocket science, guys. But you have to be disciplined enough to set up, sit with the trades, and follow the charts. Even though the 5-minute chart will have this type of volatility, the 1-hour chart will keep you in the game. Now let's look at the daily. This is the daily. Looking fantastic. Does it mean we're going to the moon, as some of the idiotic retail emotional traders love to say? Let's go to the moon. Yeah, if you go to the moon, you'll die. Does people realize that? If I drop you on the moon right now, you think you're going to sit there with your can of Coke and say, oh, yeah, beautiful weather, I'm watching Earth. No, you're going to die because there's no oxygen. Right? So going to the moon is not always a good thing. Going around the moon is a beautiful thing that Elon Musk is going to take you on. Elon Musk, man, I told you the deal was coming. And tomorrow the stock's going to gap up like nobody's business. All right? So anybody who bought, hats off. That's the way we do it. So many haters on Tesla. It makes like some of these really left-wing, hardcore channels that hate the Trump administration, the way they attack him on good things, bad things, like, look, I criticize my boy Donald, okay, when I think he's doing stupid things. It's my opinion. But to constantly criticize him for everything that he does is exactly what they do with Tesla. Like, you don't hear anything good about it. Like, obviously they were going to settle. What is this? They're going to let one of the finest American institutions die because the SEC, the Securities and Exchange Commission, the enforcement, the cops are going to throw him out? Banish him to where? South Africa or to the moon? Come on. Please. So anybody who bought is going to make some real decent money. And they're probably going to meet their goals. And I don't give a hoot about Tesla. I don't even like those cars, even though they're amazing cars. Friends have it. And what do you call? And they're probably going to go to, $400. Anyone who's following my charts know exactly what I'm talking about. Now, will charts tell you when that this SEC settlement was coming this weekend? Absolutely not. But yes, it does. It gives you an idea. Because real smart money, not the haters, not the hardcore, like, oh, I love everything Tesla, they're forever going to lose money and the stock's going to go higher. Not those dogmatic lovers and haters, but the tactical ones, real smart traders, they're buying. While CNBC pissing on them every 5 minutes. Fox News, Bloomberg not as much, but still. All you hear is, oh my God, hate. Oh, are they going to survive as a company? Like, what the F are you talking about? Because he's an idiot? By saying funding secured, which was kind of secured, actually. And he's smoking pot on the stupid show. He's under stress. Well, you run a company like that. He's not running just Tesla. He's running Tesla, SpaceX, the battery division, you name it. He's sending his SpaceX rockets as sick. It's like Star Trek, like beyond it. So you don't think he's going to be under pressure? You guys should be nuts. You guys like pull every hair out of your pocket and not just smoke pot. You're going to be doing things like you don't even know. The guy's sleeping on the floor of his factory to make the production numbers. And he's not going to be under stress? You guys get stressed out because you're down $300. Please, guys, all right? I mean, I watched this stuff, the attack and the barrage on him. I'm just like, great. Give me some cheaper prices. Because if you remember, we traded Tesla very nicely in the past couple of days prior to this news. And I showed the charts. It would go above the 50-day moving average. It attempted to do that. And then we took some nice profits of that. And the little bit that was there, that was the cheaper calls, $20, $30 out, those are the ones that fell. And a few dollar costed them averaged down a little bit on that, based on the fallout, on the fact that the SEC charged them. You are going to be very happy when the markets open tomorrow. Wake up, okay? Time to wake up, kids. Don't just go by what the sweepers are doing. It's good to know what they're doing. Look, there are services out there that sell all the data. They make hundreds of thousands of dollars every year because every sucker wants to know what everyone else is doing. Remember, he who travels fast travels alone. Machiavelli. Be the one who rides the fastest. Be the lion, not the lemming that follows the Pied Piper, the mice that fall over the cliff. It's good to know what the sweepers are doing, but don't rely on that to your tactic trading success. What the market on close is. Because who's slumping up against all those things? You think it's all institutional? They could be hedging on a certain strike price. I'm not just talking about Tesla. I'm talking in general. Because some of you are just addicted to it. Nothing wrong with that. Each to its own. Somebody said, oh, I always follow this and it always works. Bullshit. If that was the case, then that would be the ultimate trading strategy. Just following what the biggest concentration of calls or puts are. Because most of those concentration of the calls and puts are lemmings, retail emotional traders at that exact level. Now, that doesn't mean you can dissect some of the, all of a sudden a big trade comes in, somebody buys 2,000 calls on a Micron or AMD and something like far out. You're like, okay, that's interesting. That's different. Block buys are different. There are no guarantees. Somebody could be hedging their portfolios on a hedge fund side. They own $100 million worth of a stock. They could be hedging with $10 million worth of calls. That's a protective measure. Doesn't give you any guarantee that the stock's going to go there. Wake up, guys and girls. So use those things. Don't rely on them completely. Use my tactical charts. Don't rely on it completely. These are very efficient tools. My charts are extremely efficient tools. I don't look at any data out there. You guys know that? I don't. What's my overall record performance? Pretty damn good. Every single week. And I don't look at anything out there that much. Do I look at concentration? I have level 2, level 3. Who's coming in now? Waste of my time. My time. You guys can do whatever you want. The charts tell you everything you need to know if you know how to read them. It takes time. I understand that. And even then, it blindsides you at times. I understand that. Why do I understand it? Because I do it every day. With charts, you can concentrate. If you really become a real tape reader, in the old days they were ticker tapes, right? And now there's these tactical charts. You won't need to look at anything else. Like I said, I have 3 brain cells. And I want the 3 to be as efficient as possible. I cannot reallocate those 3 brain cells into everything. Focus. So, look at this chart. I kept on showing you guys repeatedly. This is the chart, you know, the one which you have that, you know, this is not with the one with the couple handle drawn, right? But there's just cup and handle breakouts within a broad macro uptrend. What else does somebody need to know? If it breaks here, we're going to fall. If it breaks the blue line, this is your acceleration channel, guys, all right? This channel drawn within the broad channel of 3125 or 3140, 2960. This is your acceleration channel. So what have the markets been doing since August? It's been moving in between the acceleration channel. It hasn't even come to the top of it yet. The top of the acceleration channel is almost 2970, 2980. That's the bear kill zone. It happens very fast, very quick. Might happen this week. Might happen this week. This to me is a very clean chart. What's this thumb? This is 2018 started. 2018 started. Look at that. This is exciting to me. And I know it's exciting to a lot of you. Look at that. Downtrend line. It's a beautiful pattern. Did the same thing back in early September. Cup, handle. Breakout, handle. Consolidation. Breakout. What's the top end of the range? Somewhere around 25.45 to 29.60. Futures are up 14. Banging higher. You're going to be gap up. You have those nice profits. Take them. But if you're not set up, you suck. Because you're not going to make any money. This is street talk. You know what I'm saying? Now, does it mean that you have to be totally loaded over the weekend? No. But you have got to follow the charts. And I showed clearly that things were good. Things were okay. So if you don't have any positions going, into the thing because the sweepers told you or some other great service on stock twits and stuff that you guys follow told you, oh no, this is going to be really bad. Everything's falling apart. Well, good luck. I'm sure they've made you guys a lot of money. So this is what's going on. Very, very nice. Doesn't mean to the moon. Remember, by the time you get to the moon and somebody drops you in the moon, you're dead because there's no oxygen out there. So we don't want to go to the moon. We just want to circle around it. So right here, what's the number we're looking at? 2950. If we break out over that, what's the number we're looking at on the upper end of this range, which we only touched once of this acceleration channel, is 2994. Wow, that's 3,000. We get there. There's your thumb. So longer term picture, fine. In between, you can deal with this intraday volatility. This is the intraday volatility that takes you, oh, that's not the chart, that takes you here in this range. So if you don't want to basically look at things during the day or you're too busy, then buy something 2-3 weeks out within the range that I specify. October 12th, that type of thing. October 5th of October 12th strikes, and just sit there. Let the markets do the job for you. Don't have to worry about what happens intraday. That's for me to worry about and update you guys every hour, every half an hour, every 15 minutes. That's my job. And this is the same chart. So you can clearly see here, moving higher. Can it suddenly change? Sure. Can always happen. Can I wake up tomorrow morning and basically have a minor heart attack? I shouldn't say that. Terrible thing to say, about myself. But yes, I can. But that's the outlier. Looking at the probability trade that God gives me a chance to wake up tomorrow morning and breathe, then the markets are going here. This is the same chart with the cup and handle pattern. Anybody who has any, you don't even need to read like technical analysis books. Some people say I'm reading a lot of books. I have never learned anything by reading books, by the way, on technical analysis. I've learned more about technical analysis by doing my own stuff. More importantly, looking at videos. Reading books. Okay. Yeah, reading books. You can just do an audiobook. Reading books on technical analysis, those fat books. Well, if this is a cup, that's a handle, and if it breaks out. Yawn. Watch a video. YouTube's full of them. Listen to my VideoCast. There's lots of training videos still left there. If you guys think that you know a lot about technical analysis, I highly doubt it. I don't. I'm trying to perfect my methods every single day. Anyway, this stuff is good because it helps you manage your trades. That's the key thing. You don't need to be a chart constructionist, whatever you call it. That's my job to do. Let me do all these charts as long as you guys understand what I'm putting across. Now, this is the daily chart on the S&P. This was how we closed on Friday. So it was still a bit of a mixed signal. Because, why? Because this is where we were. Whoop, we broke out. Hello. Wakey, wakey, everyone. We broke out of the range. Very exciting. So what's going to happen? We're going to hit the upper end of the range where we reverse very suddenly. That was on Fed Day. Remember? Big. I was watching this. It's turning like red, green. I'm like, interesting. Because we were supposed to get up here. Or here, which was the upper end of the range. We never did because there was a big sell program that came in. That was all manipulated. And then we crashed at 3 o'clock. Remember on Fed Day? It was supposed to be ABC. So, 1, 2, 3, 3 waves. 1 went up, 2 came down, 3 was attempting, and boom, somebody just let it go. I know what it was. I explained it in my previous videos. It was a big sell program coming out of the bond market. So everything just collapsed, remember? Oh, the world's falling apart. Nothing. It just came to the bottom of the range, and then the following day, the markets rallied like nobody's business. So this was where we closed out on Friday. Now listen carefully, please. God has given us eyes. Let's use them, please. This is where we closed on Friday. This is where we are now. This is the other version of that chart with the cup and handle. So this is the SPX. So it's not real time, right? E-minis are real time. So this is where we closed on Friday. So now, on a real time basis, this is what it's looking like. The stows have crossed up and above this uptrend line again. That means we have now here, just the way I showed you. This is the live chart of the same thing. This is what it looked like on Friday. This is what it looked like on Friday, kind of trying to break out. Now it's nicely moving higher. And this is where we are. And that's very positive. So retest of the high is very, very likely. All right. So enough said about the overall picture. I think I've explained way too many things. One last thing I'm going to show you is the SPX 533 charts. I'm sure our new member here and terrific guy all around, Milan Sarm, is going to just love it. And I'll be more than happy to explain the ACS on the private ACS calls sessions that I do. I've explained it even based on the basic things. Once this turns, you get a multi-day rally. The multi-day rally, in my opinion, will last overall till about the 5th of October, and then 5th of October, and then what are we talking about? What's the 5th of October, maximum till the 8th or 9th. Then we're going to go into a corrective phase in the middle of the month like we always do, and then we should end October on a strong note. But October is always a very tricky, not tricky, we get big pull downs primarily because of portfolio rebalancing by the mutual fund complex, which is the 800-pound gorilla in the market. They basically balance their books at the end of their fiscal year. That's why we have the biggest drops in October and then pull-ups. Remember October 1987? I was in college. And the markets lost 25% of their value. So October is always one of those months. Anyway, so this turns, you get a multi-day rally. Always, always, always. 100% of the time.
You're right, Frank. I love this.
This is the swing 533. Very difficult to replicate it, but I will be more than happy to show people how to set it up, and you can track it. It's just a directional bias chart. It keeps you in the game because 99% of the time traders lose money because they are out of the game. They don't manage their trades, and then they see the same thing go way higher. Saying all that, the last thing I'll show you, which is not constructed yet fully, so I'm going to construct it in front of you, like the do-it-yourself shows on TV. So bear with me 1 second. Pivot points, area, landscape. Talking to myself. Let's put some color in it. We go with Mojave. Bingo! It's done. McClennan oscillator, looking sweet. Now, the difference is this Bollinger on the McClennan oscillator is pointing down. This needs to turn up a little bit. Once this starts to turn up a little bit, then we know we are on the cusp of it's become really tight. So once it turns up a little bit, but more importantly, this is what you guys need to know about the McClennan oscillator. Once it hits these minus 37, minus 46, minus 37, minus 24, I like the higher minus numbers. Those are the times that everyone's just like, quiet, I'm not going to buy anything. This is it, it's over. Chat room, nobody's excited. Perfect times. Perfect times, okay? These are the minus 66, forget it. You don't hear a peep out of most people. Perfect buying opportunities. Perfect. Minus 37, good buying opportunities. Very good. Minus 25, good buying opportunity. Minus 17, kind of a buying opportunity. These are showing you underlying pressure on the market. Oversold, overbought condition at its finest level. I put different parameters on top of it. This is your S2. Minus 73, you better close your nose and buy the heck out of the market. Because within 24 to 48 hours, you're going to have, like we say in New York, a mofo bounce. That's going to basically rip the heads out of the shorts. And bang, the market's going to sell off again. But those are the perfect buying opportunities. You ever see minus 73, you don't even need me. You just buy like your favorite stock. Buy frigging Apple. Buy anything. But those are the times probably you won't even do anything. You're just like, okay, I'm turning the TV off. It's over. And we've been to minus 73. When you get to minus 73, big smile in your head. Put your helmets on, grit your teeth, and go to war. Buy. Plus 37, plus 42, plus 39, plus 50, plus 46. You all are happy. Everyone's happy. Oh yeah, Google's going to $10,000. Amazon's going to $50,000. Everyone's like emotionally just loving it. It's just like, okay, they're making some money. All great. Yeah, buy. Sell. 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 That's it. Sell. Use your euphoria to be a seller. Use your despair to be a buyer. That's all. Mix it in with the charts. You'll be fine. Always opportunities in the market. Whether it be spec stocks, the Tilleries, and Tilleries not a spec stock, it's a real company, like NBev, things like that, BLS, you know, the thing that goes from like 2 cents to like 4 cents every other week. Aside from spec stocks, high momentum trading stocks, the FANGs, biotech stocks, selective names, beautiful chart setups. There's a lot of choices I provide. Do what you need to do. On that note, let's have a phenomenal week. Futures are going berserk now. Futures are up 16. Now, problem is, and I'm sure Milan's going to answer this question, or DC Trader, you guys really are, you know, I think you guys get my work. Is the problem is, what am I going to say? This is futures are up 16 right now. God knows how much Tesla is going to be up. But then at the same time, Tesla might be down. Why? I doubt it. I doubt it. So what is the problem? This is the last thing I'm going to ask you, and I would like some response. What is the problem with not having a setup prior, seeing futures up 16, and dealing with the markets opening up that high? Futures are up 16. Dow futures right now are up probably 200 points. What's the problem with that on a technical basis when things happen overnight?
They're going to have to do an immediate reset.
Yeah, exactly. And sometimes those resets are very tricky. That's the problem, that it automatically, what Walter just basically said, and thank you, is all these beautiful things that we want the markets to go to immediately happen and don't give us a chance to get in there at a reasonable price. That is why it's so frustrating. That is why you always, whether it be a Netflix or whether it be an Apple, I'm not giving you big names here, or Facebook or the SPX or the SPYs or the Qs, you need to have the setups a little bit when you're starting to see these type of formations happen. Because by the time you're coming in and you don't have anything or nothing material to take profits on, you're going to be in a real difficult position. Because it is, like Walter correctly pointed out, DC Trader, we're already going to be so friggin' overbought, we have to wait for that reset, and guess what the markets do? They don't reset right away. So emotionally, they force you into the market, and bang, that's when they reset. Markets, a whole bag of tricks. And these machines have made those tricks happen faster and faster. I hope this was a very helpful session. Certainly was helpful to me to explain some of the things that goes through my head. I encourage everybody to sign up for the ACS Advanced Coaching Sessions. I'm not getting rich off the ACS sessions, trust me, because it takes a lot of my time, and I try to spend a little bit of time with my family. I thank you all for your support. I hope you guys learned something. And the only best teacher ever that is out there is yourself. Experience is the ultimate teacher. Not age, experience. But in order to have that experience, you need to know some strategic methods and tools. That's what we try to do here at TSLA Trading. God bless you all. Let's make it happen. Let's have a great week. Good night.